When you look at how many times the average dollar that comes to us, how many times it has been taxed and how many
It'll make
times
you
it will
sick.
be taxed, you start to wonder, how do we get to keep anything when you're thinking about that?
This is a little snippet about the documents we have to keep track of.
If there's an important document, I don't have it. I'm a constant disappointment to the DMV. Sir, do you have your social security card? I haven't seen that in 30 years. Sir, it's an important document. Well, then you guys shouldn't have printed it on a gum wrapper. Okay, at least the passport people made a book out of their thing. It's got pages and a cover, and yes, I lost that one too, but I shouldn't have. I also don't have the Declaration of Independence.
Let's dive into the benefits that somebody should be getting out of the proper tax plan for retirement.
Yeah, so I mean, if you think about it, there are so many ways that we can actually plan correctly to avoid, correct, or utilize certain things so that we don't pay extra taxes, whether it's today or in the future, right? So if we just think about our investment portfolios in and of themselves, the question is, where are our assets located? Are they in a taxable account, like our regular brokerage account or CDs at the bank? Or are they in a tax deferred account, which means that we have an IOU to the government, right? That means that we're deferring taxes now only to have a future bill that we have to pay. Or are they in Roth type accounts or tax-free accounts? Now, those are dollars that we've put the money in. We did not get a tax break, but everything it does in that account going forward is potentially tax-free forever, or for at least for as long as our lives. So the main thing we can understand is, what assets do we have in each one of those style of buckets? And is it the right one, right? So in the taxable accounts, that's where you can do tax loss harvesting, right? You can even do tax gain harvesting. People don't realize that the lowest capital gains rate is actually 0. And you can have household income of over $88,000 and still potentially be in the 0% capital gains rate. People are unaware of that. And yet we apply that every single day to folks that have they have positions that they've had for a long time. They own John Deere stock or Caterpillar or AT&T or UPS or whatever it is. We can show them ways where we can use tax gain harvesting, where they can sell that position. They can even buy that company right back if they wanted to. But the point is, they sell that position and they lock in a 0 capital gain rate on those transactions. So basically, when you're looking at portfolio taxation strategies, they're pretty simple, right? Those are the things that any of us can do. We once met with a gentleman, and we made certain that he knew we liked all of his assets. We just didn't like the buckets that they were in. By reconfiguring the exact same assets, Heather, but putting different amounts in the taxable versus the tax deferred and the tax free, we showed him that we expected to save over $930,000 going forward, simply by doing just rearranging the same assets. And these are things that his CPA just doesn't do. It's not that he didn't have a guy, he had a guy, but that guy was worried about last year's 1040 or whatever it was. He was just making sure they had the right tax forms. He wasn't paying attention to this stuff, and it wasn't that guy's job. But that's what we do. So on the portfolio side, there's all kinds of things we can do. And if you're very wealthy and you have really good established long-term legacy positions, there are all kinds of things that are currently available because of the OBA, the One Big Beautiful Bill Act, that allows us to potentially mitigate other taxes. So those are some of the big things in the front end when you're just talking about a portfolio. When it comes down to charitable giving, those are other things. So if we've done a great job saving and we feel that there's going to be a lot of money left over. Now, some of it we want to make sure that we're giving to our families and charities and our families and so forth. But other things we might want to earmark for charities. We can use donor advised funds, charitable remainder trusts, slats, grats, bats, and cats as well. I'm being facetious on those last two. But almost all of the lexicon of things that we can do, there sometimes can be very, very favorable for getting tax breaks now, and then allowing the money to grow, and then being able to give a very large gift to charity. So those are things that we can do to knock off current tax rates, but we can still have long-term effects that are great for our families. So when you look at those types of things when it comes to charity, that's also big. The estate planning piece of the puzzle is of primary importance to me, right? Because when we're typically in our office, we're dealing with people that have saved very well. We're talking millions of dollars, multi-millions of dollars, 10s and 20, lots of money. And the whole thing is we would expect, unless something horribly goes wrong, we would expect not only them to be taken care of in their retirement, but their kids are probably going to be taken care of. Even their grandkids are going to be pretty good. The question is, can we make sure that we protect it from government, overreach? Can we make sure we're protecting it for the long run from divorces in the family, from healthcare issues, from all those things? And that's where we really want to make sure that we have our trust established correctly, right? So these are typically estate planning ideas, whether we're using lifetime giving trusts, right? Or whether we're using dynasty trusts, whether we're using deferred sales trust, whether we're actually implementing this for spousal continuation trusts, right? Where one spouse passes away, we want to be certain that that trust accommodates the income needs for that surviving spouse the entire time. And at their passing, then the assets get shuffled around. That is also of primary importance if you have a joint family. If you were previously married and have children on one side, trust designs are the best ways to make sure that your wishes are taken care of correctly, right? I can't tell you how many times people come in and they came from, it was a second or a third marriage. And there are kids out there that feel like, unfortunately, that wasn't what their dad had wanted. They wanted something different. Unfortunately, without trust documents or without the proper things in place, unfortunately, we don't know that, right? So in our firm, we want to make sure that we've thought through that. And we also want to review things too. A lot of times people say, well, this is what I want to do. And that was exactly right at that time and date that they did that. But 5 or 6 years down the road, things change, or there's different circumstances, or new grandkids come into the fold, or there's a death or a birth. And we want to make sure that we've reviewed those documents so that everyone is accommodated, right? So those are important too. So all of these things, believe it or not, even though it sounds like estate planning and it sounds like all these things, it all relates to taxes. It's how we're going to be taxed now, in the future, or the next generation, right? Because the one thing that I have said consistently and consistently and consistently over and over and over again is the fact that our government cannot maintain itself at the current tax rates. We cannot. We will go under. Now, that is not a joke. That is not doom and gloom. That is just simple math. And when it comes down to it, two things will have to happen. We can either grow ourselves out of this problem and reduce a tremendous amount of the money we're spending. Now, what would we spend the most on? Social Security, Medicare, Medicaid, and interest on the national debt. No one really wants to reduce those. So that's number one. The only other thing we can do, Heather, is raise tax rates. Raise tax rates is the only other way to do it. And if you go back to when we were much more solvent in the 1960s, the lowest tax rate was 36%. That was the lowest. The highest was 90%. Now, if we went back to that tax rate, would we fix a lot of our problems? Yes. But would that completely destroy a lot of our ideas of the money that we've earned and we would like to live on and give to our family? Would it destroy that concept? Yes. So a lot of the things and why we're talking about trust planning when we're dealing with taxes is for that exact reason. We want to safeguard the money correctly so that we have access to it. But at the same time, when something happens to us, we want to make sure that the government gets the least legal amount based on what we can orchestrate, right? And laws will change, and we want to ebb and flow with that. But it's so important to the point to where our incomes, our assets are all fundamentally based around how are we going to be taxed on that, right? The current environment allows us to do a lot of different things, but we have to seek it out, right? So when this gentleman said, hey, I don't have all this stuff, I don't have it in gear, when it comes down to you thinking about taxes, ask yourself, are you being proactive, paying the least amount today, the least amount over time, or the least amount cumulatively? If you don't have an answer to one of those questions, you probably don't have the right plan.
Well, John and his team, they're here to help you get answers to these questions and put it all into a plan that works for you and the years ahead. RetirementSolutionShow.com is our website and where to go to begin the conversation with John and his team at J. Hagan Capital. If you take nothing else away from this conversation except for this one understanding, when it comes to your taxes, you do not have to just take what Uncle Sam's gives you. You can utilize strategies to work to reduce your future taxes and what you might have to owe. At J. Hagan Capital, they are here to help you understand what strategies might work for you and your plan. Let's get to work on that. Visit us at retirementsolutionsshow.com or again, click on the links we got posted in the show notes.